With us now to discuss is Union Pacific President and CEO Lance Fritz. Lance, thanks for joining us today.
Thanks for having me, Morgan.
So we've had some interesting comments and some interesting data where freight is concerned. Cass Freight Index earlier this week, which was really passed around Wall Street pretty actively, said that the shipments index has gone from warning of a potential slowdown to signaling an economic contraction. Does it feel that way to you through the railroad lens right now?
Yeah, our markets feel about like they had when we entered the second quarter. Trucking is pretty loose right now. There's excess capacity in the trucking market, so that impacts a fair number of our markets that we compete in. There's some things happening that are unique to the railroad, like our markets in frac sand, where white sand that we ship down from Wisconsin and Minnesota is being replaced by locally sourced sand in Texas. We see a little impact from the coal and energy markets. And then we do see a little impact from trade, but I can't say that we see some kind of inflection point occurring right now that would make me think that the third quarter or fourth quarter is getting much worse than what we see right now.
And now you've been implementing precision scheduled railroading, record operating ratio for the quarter. It looks like you're still targeting sub 61% for 2019 and below 60% for 2020. But you're already there. How much lower can it go?
Well, so what we've told our shareholders today is that our guidance, sub 61 as you point for 2019, sub 60 for 2020, isn't about just achieving just below 61 and 60. It's about doing as well as we can. And when we set that guidance up, it was prudent. We still think it's prudent. We are making great progress. We just had an exceptional quarter. And I have to note that the women and men of Union Pacific did a stellar job, not just generating an excellent customer service product and productivity and efficiency, but doing that in the face of some one-time epic flooding that occurred both in the Midwest and then in the southern part of our network. And they're overcoming that and performing like we did in the second quarter is pretty exceptional.
Pricing, have we peaked in terms of freight prices and rail prices?
I'd never say we've peaked on pricing. It's a little tougher market than I would like, mostly because of loose truck capacity, but we still generated 2.75% in yield this quarter. And I have to always remind our shareholders that we calculate yield in the most conservative way you can. We take all the dollars that were generated out of price increase divided by all of our revenue dollars for the period. So, if things don't move that we priced last year, we don't get to count that as price. And 2.75%, that's pretty solid performance. And as I look forward, the thing that I'm optimistic about is that our service product is improving. Our Unified Plan 2020 is creating more consistent reliability. We are more efficient. And I think that sets us up to do as well as we can in whatever market that we face. And that includes being able to price.
Lance, it's David Faber. Yesterday we made a lot of course, Morgan spoke with Mr. Foote, the CEO of CSX, who said he's baffled, in a sense, by the U.S. economy right now. Are you in agreement with that assessment, or do you have a better sense of the U.S. economy?
U.S. economy, to me, feels like it's still growing. It's growing at a pretty tepid pace. It's definitely slowed down a bit. I think there's still plenty of opportunity for it to continue to grow if we get certain things right, like trade policy. But we're set up still pretty well, all right? The tax reform has set U.S. industry up to be competitive globally. We have the best infrastructure to serve our industry. We've got healthy consumers. Their wages are growing. Our job market is good. And so there's a few things that we have to get right. We have to get trade right. Presuming we do that, I think the economy looks pretty sound to me.
What does getting trade right mean, Lance?
Well, there's a couple of moving parts there. We need to ratify USMCA. That's critically important. Our neighbors to the south in Mexico, they've done their part. And now we need to do our part and Canada needs to do its part. We need to get a deal struck with China that does hold them accountable to the spirit of the WTO, does open their markets in a more balanced fashion to U.S. industry. And then we've got to move on to start negotiating an effective agreement with Japan and with Europe. The fact that we're not in TPP says a trade agreement with Japan is critically important going forward.